Hi folks, guess what? It's me again. Thanks for tuning in. We are talking all things property and all things finance. How do you finance your property? And I'm really pleased once again to be joined by Orla Shevlin. She's a senior broker at Trussle, and we're working with Trussle right throughout this. They are online brokers. Orla, I want to talk about getting a mortgage and the challenges of doing that if you have poor credit. Perhaps we should kick off. How do you check your credit score? Because we've all got a credit score. Let's just kick off with that if we can.
So first step, gain a copy of your credit report and see exactly what's on there. Would say
so you can download that.
So Experian, Equifax, Check My File. Just be aware you want the full report rather than just the number, because each credit provider will have a different number, and you could just. It doesn't really mean a lot. So
sorry, I'm not following. So the different credit report providers, do they all turn out the same info?
So they should all have access to the same credit profile that you have. Yeah. But say Experian will give you a score out of 999, whereas Check My File could give you a slightly different score. So that score doesn't mean too much. It's the full credit report. What's on your payment history? Okay. Is there any red markers? Is there any registered CCJs? You want to be looking at more in depth at the report. Okay. So once you've got a copy of your credit report, if you find that you do have poor credit for any reason, speak to a broker, because yes, you can get borrowing with poor credit, but it's not going to be as easy if you had kind of an excellent or good credit score rating. Okay. And that's purely down to lenders' criteria. So it is a bit of a minefield when it comes to people with poor credit, because kind of certain lenders will accept some things, yes, others won't. So that's why kind of get the broker to do the legwork for you. So essentially you're avoiding less disappointment by you'll have to approach a number of different lenders until you can find a lender that will be able to lend based on your situation.
Haystack. I just wanted to take a moment in the middle of proceedings here to say a very big thank you to our friends at Trussle.com. They are the sponsors of the whole series. Trussle were the first online mortgage broker, and they've indeed since been voted the best mortgage broker. Not just online, but the best mortgage broker. They are a hassle-free, fee-free way of getting a mortgage, and indeed they are the only broker with a 5-day speed promise. How long does your credit score take to build up?
So it builds up generally kind of from when you start opening a bank account.
If you had a debt problem or a CCJ or something 5 years ago, and it was sorted and cleared, would that affect your credit score today?
It can still be on there. It's known as historic kind of adverse. So really, lenders are looking at the last 6 years, but kind of more importantly is the last kind of 12 months or 3 years when it comes to criteria aspect of in terms of what they will accept. Because ideally they're looking for you to have good-ish credit behaviour in the last 3 years or 12 months when you at the point of submitting your application.
Well, that's probably answered my next question. I was going to flip it on its head and saying, how long would it take you to tidy up your credit score and improve the rating, and therefore give you access to the widest possible amount of lenders? If somebody wasn't happy with their credit score, how quickly could they tidy it up?
It all is very much dependent on what's happened, and kind of some things may drop off. You might have a default and it's been there for a number of years and soon it won't show on your credit report. It may then go into the time frame of that it was a default 3 years ago, so then you could approach a high street lender. So it's very much dependent on what the circumstances are. If you've got a couple of months to wait for something to fall off your credit report, like a default, it might be worth waiting on submitting your application to be able to access better lenders or kind of better known lenders, not adverse friendly lenders, in order to get a more competitive interest rate. So I would say speak to a broker and they would be able to assess if it's worthwhile submitting your application now or waiting a little bit. I wouldn't say kind of give up all hope as soon as you look at your credit report and you see a load of red marks. there are lenders out there who want to lend.
Yeah.
It may not be as straightforward. It may not be as competitive as high street lenders, but there is always tends to be a solution that your mortgage broker can find for you based on your circumstances.
Got it. Good advice. Can we talk about guarantors a little bit? And if you do have poor credit rating, and it's going to take you a little while to sort that out, and you want to get on and apply for a mortgage, how can guarantors help? And I'm thinking mums and dads and things like that are looking to help their kids.
So guarantor mortgages aren't as much as a thing anymore. They're known as joint borrower sole proprietor mortgages.
Okay.
So essentially that means that two or sometimes three people are on the application. So such as kind of dad and daughter.
Yeah.
They'd both be on that application. They'd both be jointly liable for that mortgage. You have to seek independent legal advice.
Okay.
Kind of so to show that you're
You're
all
separate
understanding
entities, yeah.
what's going on. But only one of you would be on the title deeds for the property.
Okay.
In order kind of to assess your application, credit checks will still be carried out. So potentially, if you've got bad credit, that can still be a factor that you might not be able to go to a high street lender and get the joint borrower sole proprietor because your bad credit is affecting the application.
Even though you're I mean, if we use your example of dad and daughter, so if daughter had bad credit, dad had good credit, dad was operating as a guarantor, does that still affect?
That would still affect it. So he might be able to bring up the credit rating slightly.
Okay.
So, for example, if it was a standard application with kind of boyfriend and girlfriend, boyfriend had a few blips, girlfriend being on the application might kind of override things slightly. Yes. But it's a situation of how the lender's going to see it and what the credit score is going to be overall when we submit your application.
Okay.
So it's not a guarantee that having dad on the application will help things.
But it does help. And I guess brokers such as yourself are there because they've got a better understanding of how lenders are going to react. Can I ask one question? If using that dad and daughter situation, so dad's a guarantor, but he's not on the title deeds of the property is owned by daughter.
Yeah.
If daughter defaults on her part of the mortgage or on the mortgage, what happens?
The dad would have to pay the mortgage, and it could potentially affect his credit rating.
Yeah.
Because then he's got a mortgage linked to him, and that will be down as a missed mortgage payment.
Yes.
Which will have big implications later for him.
Yes. Yes.
So that's why you're getting the independent legal advice. So everyone needs to be aware of what the repercussions are in terms of how things will be affected.
So it can be super useful, but everyone needs to go into it with their eyes wide open.
Yeah, and it's not going to be for everyone. Obviously, it comes down to family dynamics, who's comfortable with what and things like that.
Yeah. Any other sort of general tips about managing your credit rating? I mean, because kind of borrowing money and credit cards and debt, it's a bit of a way of life nowadays. Any other general tips on assisting that?
I'd say sign up to a credit reference agency. So as I said, likes of Experian, Equifax, they can give you tips in how to improve your credit rating.
Okay.
Get on the electoral roll, make sure all your name's up to date. You're married. If you've got married, is everything now in your married name, including your ID, including all your credit cards and things like that. And
for a lot of people, that is actually a bit of an issue. And you don't know it's an issue until you suddenly realise actually sometimes it's your middle name and sometimes it's not your middle name and you've moved house before and yeah
definitely but the amount of people who can increase their credit rating straight away just to make sure they've got all their names in order, and sometimes even flat numbers numbers can, you kind of register something with one address and you've not put the 1B on the other address, and that can all affect things slightly. But also in terms of credit utilisation, so lenders have kind of debt to income ratio. How much is that person dependent on a credit card? Have they got more debt than they're earning every year? So ideally, you don't want to be going up to the max limits on your credit cards. You want to be using them little and often, clearing them every month, setting up a direct debit, making sure you don't miss any payments. As well with credit cards, you don't want to be taking cash out.
Off the credit card.
Off the credit card, that can be seen as a red flag. Does that person not have enough money in their current account to see them through the month?
Yeah.
Just keeping aware of things. So just keeping track of your accounts, making sure you've got everything in order. As I said, make those direct debits, make the minimum payments on credit cards. You don't want to be having a missed credit card payment just before you're submitting your mortgage application.
Tread carefully. So let's say someone hasn't been able to improve their credit rating. So you use the term adverse lender. So they've got to go to an adverse lender. What's the difference? What happens?
So adverse lender, they generally are much smaller lenders. So they're not your high street lenders. They won't be lenders that will be part of kind of any speed guarantee promises to get a decision within 5 working days.
Yeah.
Smaller lenders with manual underwriting decisions. So that means they'll be looking much more carefully at your application because you are seen as a bigger risk. In the past, you haven't been able to keep up payments potentially. They want to ensure that's not going to be an issue on keeping up your mortgage payments.
Sure.
So there will be back and forth. So that's why it's a good idea to have a broker who knows all the answers straight away or can package the application nicely once we submit the application to them. They'll be asking, what were the circumstances around you having those missed payments? Was there any reason for that CCJ? How can we have the reassurance that they won't be in that situation again?
Okay, so at least, it does give someone the ability to have discussion and explain.
Yeah, exactly. But you're not going to be getting a mortgage offer quickly.
Yeah.
So you need to know kind of straight away when you're submitting the application, it's going to take a good couple of weeks, maybe potentially up to a month.
But you should get a mortgage offer, but the mortgage offer may not be quite as exciting a one as you might have got.
It might not be as exciting. Also, a lot of these adverse-friendly lenders, they have tiered products. So when we submit your application, they'll do their credit score and underwriting, and they'll say, based on your credit score, we're going to offer you this rate.
Yep.
So you might not know exactly what interest rate you're going to have at the point you submit your application because that can be dependent on how big a risk factor you're seeing to them.
It's complicated stuff, but as you say, I guess that's why you're a broker. That's why we're recommending people do get that level of advice and help on the way through. Orla, always good to talk to you. Thank you really very much for your time and advice. It's great to see you.
Thank you.
A few words of warning. Your home may be repossessed if you don't keep up repayments on your mortgage. You may have to pay an early repayment charge to your existing lender if you remortgage. Individual savings may vary, and terms and conditions can be found at Trussle.com.